Alrighty, good morning everybody. It is Friday, April 1st, 2022. Getting into the second quarter of the year now. Uh, just to quickly review yesterday, it was another day where we didn't trade. So just going back from this 3 minute perspective, I think is a nice zoomed out view here. So the market opened. Remember, we were down below 50% of the previous day here. Still expecting to go back up and test the highs at 46.31 because, in my opinion, we don't really have the strongest bearish argument from up there. So I'm still expecting a push back up into that area to test, if not continue to push through it at some point. But of course, we have to go with what the market's doing right now, and that is it's continuing to sell off. So, especially after yesterday and that really aggressive sell off at the end of the day, um, you know, just because I'm expecting a push up into the 46.31 area to test that and again potentially push through doesn't mean that we're not sellers right now. I'm just saying that I have an expectation of that. So if we do start to get some really strong bullish follow through, those will be targets up there, right? But we need to go with what the market's doing, and obviously it is continuing to pull back right now. So let's go back again to yesterday. We did not trade. So for the last 2 days, I have not given a single trade call. We have put out our pre-market, right? And we had our expectations for what we wanted to do and what our targets were going to be, regardless of what direction the market was going to go. And I drew this. The interesting thing I want to note here about yesterday is that I did draw in somewhat of a wedge formation here. And remember, we only saw something like right around that when we came into the morning. And I noticed we had a pretty good trend line to the downside. It looked like we were starting to coil up and make higher lows and lower highs. So I threw that wedge up, and this is what ended up happening yesterday. Again, this is why we weren't trading. It was basically just sideways chop. And in my opinion, not quite the market I'd want to be trading in for high probability trade setups. There were some beautiful scalp trades on the 512 tick chart, so plenty of opportunity if you were a scalper for just a few points on either direction. But I was looking for some higher probability setups, and that did not occur. Now our first support level, and this is interesting to note, was our 74 quarter up into 77, which should sound like a pretty familiar level. We've been watching it and seeing it react. Here was the day before. I think that was the low of the day before, 74.75. This is a zone we've been watching, and we came down into it about a half hour into the open, bounced right out of it, retested it again, and held for this larger bounce up. So just an interesting observation there that we did hold our first expected support zone once again. And then what happened was we finally started to break lower. So we held below 50% of the previous day. And I think what I told you guys coming into the open was I didn't really want to be trading basically between somewhere up at the top, maybe around 45.90, down all the way to the low at 45.70 until we could break out either to the upside or to the downside. I really wasn't interested in trading. Well, what ended up happening was after we traded, well, after the morning room was over with, the market started to come back down, came right back into that 75, 74 to 77 area, bounced out, and used the back end of the trend line to pull back and come up. And look at what happened here. Three tests right into the back end of that wedge. And then we started aggressively selling off here into the end of the day there. So once we got through that previous daily low, we started holding and continued to push lower here. And we actually made a low of the day at 45.27. This was, let's put it this way, I had 45.27 on my chart on my 60-minute right here, which was the pretty much the low of the day yesterday. However, I updated that level and gave out 45.31 quarter to everyone when I put the eye levels out. So I kind of amended it from 27 to 31. I didn't want to keep 27 on the eye level list of levels because they were so close together. And it turns out that I probably should have left it there because we came right into it, and that was the low of yesterday. So the low being 45.26 quarter, just 3 ticks below that level. Again, I have it on my 60 minute, and on my 60 minute I never updated it up to 45.31 quarter. So seeing that, I was a little disappointed I didn't leave it on there, and because of what happened, I might end up adding that to the list. So we'll see. I think I will. So that brings us into the morning here, and you can see that the bulls tried to kind of bring it higher, but really not much follow through, right? It looks out very much like a bear flag, right? We're coming off of a pretty strong sell off, and then the bulls come in and start to kind of channel up like this. Again, this type of formation typically would lead to a break lower if you're looking at it from that perspective. Um, and so that's where it brings us here this morning. We just pulled back and held the 61.8 retracement of the leg from the low of yesterday up to the high of the overnight session. Something else interesting to note here is the high of the overnight session so far is our 45.50 eye level. I think it was just a tick in front. Oh no, 45.50 to the tick. So in the overnight session, we held, okay, 27, fair enough. I didn't give it to you on the list, but we came up and held 55.50 to the tick in the overnight. And like I said, now we're just kind of testing the 61.8 retrace of this leg right here. See that? Right to it, to the tick. So let's go ahead and do what we do every morning and go jump up to the higher time frames, and we'll take a look here. Of course, the ultra high time frames, probably nothing new to say here, but I will go over to our weekly and point out that we were watching that potential bearish signal, and so far this week has really started to pull back. Again, I wasn't emphasizing this unless we started to get a nice agreement with that daily chart, and the thing with the daily is it's tough to call because I think some would argue that because the all-time high up here in this part of the chart, or that actually is the all-time high. When we came up and first tested that 47.93 area, we made a high in the RVI right here. And then looking at right now, we've pushed lower from that high down to here, but the RVI pushed higher. So there's still technically an argument that could be made from these two swing highs. I'm not necessarily in love with it, but I think there's technically an argument there. So I guess we have a little bit of confluence there. Don't really see anything on the monthly just yet. So for whatever it's worth, we might start to get a more aggressive pullback, but I'm still skeptical that that is it. So what else can we say on the daily here? Got some really strong follow through yesterday to the downside, but we're coming right back into this major swing right around 45.13 here. Remember, 45.13 was that major swing low back here that we pushed up into and could not get through for 3 days straight, right? There was basically a test almost to the tick on 2 days in a row, and on the third day we kind of peeked into it, but eventually, didn't actually break through and closed right at it, and then pulled back and got through after those 3 days. So coming back down, that is going to be a very important level of expected support. Outside of that, from this zoomed out perspective, not much else to say other than the very obvious major swing high down here at 44.11. That would be another major zone that I'm noticing here on the daily chart. And then a little bit further into that next major swing down at 43.25. So let's start getting into the intraday time frames and see what these things are saying. There is a pretty good bullish divergence from the previous daily low on a few time frames. So if they do start to get some strength to the upside, that wouldn't be a surprising thing to happen. So the sell-off that we got from the highs a few days ago, to me, was a little bit surprising because I didn't really have any signals. But this down here, potential for that follow through. But keep in mind, it seems like the bears are pretty strong. So we're going to have to see some levels above us start to break before I really have faith in that potential bullish move. So let's look at the levels that we want to watch this morning. Um, just looking at where we are right now, we have a couple swings that are marked on the chart, and I think those are going to correlate over to the 60 minute. So we'll go over the 60, but there's one thing I want to mention from the 4-hour perspective here, and maybe I can move this down and zoom in a little bit here. So the top end of the structure zone happens to be this major swing low at 45.74.75. Right into maybe 77. So that 45.75 to 45.77 area, very possible to find some trouble this morning. And so let me just see something here. Yeah, so that happens to be, if we look right here, see that's that major swing low right there. This is again the 60 minute, a little bit more zoomed in. So this morning, if the bulls come up, that is going to be a really critical area to watch. Somewhere right around 74.25 is the actual swing low, but we do also have 78.75 and then this 70 area. So it's kind of a little zone, but that's going to be really important this morning for the bulls to get through. So just kind of keep that in your notes and keep that in mind. Outside of that, from the structures, pulling back, notice that we're just about into, and again, it's that major swing around 45, what I say, 11 to, I guess it's 15-ish in there. Just above it is the break of the two structure zones. So we have kind of 45.20, and then from there it's into that 11 to 15 area. So let's go into the 60 minute where we have our levels marked. And you can see down here, I've got it highlighted 45.13 up into 15 there. That's going to be important if the market continues to sell off this morning. So we've got that. And now let's just talk about all the levels from the 60-minute perspective. So here we are, again, holding the 61.8 retracement of this overnight leg. Pushing up this morning, again, notice the high of the overnight was our eye level at 55.50, so getting through there. We've got a couple levels we're going to want to pay attention to in the most immediate area to the upside. And what we're looking at here is, first of all, the 38% retracement of the previous day. So the high to the low of the previous day, and we have the 38 sitting here right at 59.75. So that 59.75, I put a line across. So we're going to want to watch that this morning. The other level is 50% of the day, right? Just in front of the major swing I just talked about at 74. So again, that is a little bit of a range. There's 70, 74, and 78. All three levels kind of line up perfectly with some retracements and stuff and price action and everything else. So it just is what it is. We've got again, 70, 74, and 78 as three really important levels for the bulls to get through this morning. So I'm going to be waiting to see a break through that zone before I really get heavy on buying the market. That doesn't mean that I'm not going to scalp and maybe get an entry long down here somewhere if the conditions are right. But I'm going to become a much more bullish biased if we can get through that major swing at 74. So keep in mind those three levels up there. The other thing I want you to notice is if we draw the fib for the entire sell-off from the actual high all the way up at, again, our eye level at 46.31 to the tick, the 38% retracement happens to be our 45.66 zone that we've been watching for a few days now. So that's also in play. And then notice that the 61.8 retrace of the whole sell-off happens to be that 90 quarter level that I marked 2 days ago. It's once again relevant. So not only, so 2 days ago, it was relevant from a fib perspective. Yesterday, it was relevant because I believe it was the overnight low or very close to it within a tick or two. And this morning, it happens to be almost exactly the 61.8 retrace of the whole leg down. So if I go ahead now and get rid of all the other stuff, this is what we're looking at. The 38 retrace 59.75. That breaks right up into 45.66, give or take a few ticks. If that breaks, we've got 70 as 50% of the yesterday. So never know if that could potentially be a problem. And then we're right, and that's basically the start of that zone, 70 to 78. So you've got 70, 74, and 78 right there. Again, I'd like to see the bulls get through and up on top of that to be more confident in a potential breakout back up. And then if we continue to get through there, that 61.8 retrace level that was relevant for 2 days now is up here at 90.25. Any further from that, it's right back up into that 4600 zone. And I might as well go ahead and copy this over to April 2nd so we have that shaded in on our charts. So that little region right there, just about 45.99, 4600, give or take a few ticks, would be the next target if they end up shooting through that 61.8 retrace. Now let me get rid of, I just want to show you again from this zoomed out perspective. We drew this wedge in, and it's just so beautiful that we come up and we go right to the back end of it and just fail. Then how many times do I draw a triangle up on the chart and that exact situation happens? It seems like almost every time. So let me get rid of it now. I think we've made our point. And I think that's basically it for the upside. So everybody should be aware of all the major zones. Remember the previous daily high, also pretty important to get through for the bulls. And then we're right back to 46.30 to 31, which was the failure point from a few days ago. Any further than that, and we've already talked about everything up here. 42 is an interim level before we get to the major eye level at 58. And then from there, we're right up into that 4700 region. On the other side of things, now that we're selling off, we've got the levels that we've been watching for a few days because for the last 2 or 3 days we've been up top here. So we've talked about everything that's below us. So let's just really quickly review everything. The low of yesterday, again, basically our eye level at 27. And again, I'm guilty of not updating this on my 60-minute chart, so that's why I remember it, is because it's been on my 60-minute chart. From there, if that breaks the previous daily low, we're right back to the same zone we've been watching at 45.13 to 45.15 or 15.50 there. And again, if that breaks, we're right into 44.96.75 eye level into the swing high at 98.50, so a little 2-point zone there. And then it's right, and you guys should already have all this marked and you should already know the levels. This major swing here at 44.81.25, and then if that breaks, we're right into 74.50 to 77 there. So those are the major zones I'm looking at. Any more further than that, we're now more than 100 points down, which I know is not much in this market, but that's what we're looking at. We have everything else kind of marked. 67.75, the major swing here at, actually, the major swing here at 58, 58.50, and then the little pocket here from 52 to 54. And then there you have your 45.50, and then your 31.25 down here. So those are all the different larger targets to the downside. And I think that's basically it for today. It's pretty straightforward. If the bulls can get up through, first things first, get up through the 38 retrace of yesterday at 59.75, and then they can get through the major zone here, then I would be a little bit more interested in having faith in the bulls. Of course, we have to kind of take it with level by level here because the 61.8 retrace of the whole sell-off is also important to see the bulls get through. I'm just saying with each successive level that gets broken and with the momentum on the bullish side as it's breaking, I will become a lot more confident in that side. So there's that. And then if they break lower, then I'm going to be a heavy seller until we start to get the conditions and the signals that the bulls are going to rotate the market back up. So I will be short biased as we sell through the previous daily low until we start to get some type of counter indication. So that's it for this morning. Again, our orange power level works over and over again. So keep in mind that if we start to break down into the previous daily low and come back up, that might end up being an interesting level to hold. So that's what we got for this morning. We'll be back on Monday for our higher time frame review, which don't think really has changed much, but we'll go ahead and scrutinize those higher ultra high time frames. And so have a great weekend. Look forward to seeing you all back on Monday morning.